I think in terms of market dynamics itself, as you have rightly pointed out, there are three kind of big themes in the market for us. There's geopolitical tensions that you have pointed out. There's inflation that's on the horizon. And clearly some of the COVID recovery that we are seeing as economies slowly come out of COVID itself is clearly driving a lot of demand and traction for us in that space.
Will, structurally, the iron ore market has shifted, hasn't it, from longer-term contracts to flexible, more spot market contracts. So just can you give us a sense of how the SGX has pivoted to that dynamic and whether there are more derivative products that are in the offing from the SGX?
So an important element of what we do is to think about how we can provide a wide, verified, diversified range of contracts for market participants. What's been quite interesting since the breakdown of the annual negotiation in the iron ore market is the growth in indexation, the growth in spot market trading. And that's an important fundamental of how it allows market participants to be more accurately managing their price risk. Now, one core function of what we do is to ensure that there are a sufficient number of contracts that allow market participants to trade the different dimensionality of contracts, which is why if you look at our iron ore suite of contracts, we have the base 62 contract, we have got, and we have introduced, in fact, a couple of years ago, the 65 contract, which is higher grade iron ore contract. We've got a lump premium contract. And there are considerations on whether there is a necessity for us to broaden the suite of contracts to make it more effective in terms of adding value to the way clients would think about hedging their portfolio. Now, it's a very, very successful suite of products for us. It trades over 2 billion tons of iron ore on an annual basis. And, on a daily basis, that's over $1 billion of notional traded in the iron ore complex.
I know Singapore Exchange is planning a suite of derivative contracts for battery metals. Are you still hoping to launch that before the first half of the year wraps up? Is that still on schedule?
We absolutely are, Sri. It's an important suite. It's an important gap in our current product suite in terms of how global economies are currently transitioning to the global movement. I would say that one important consideration for us is the fact that, we have not seen for a very long time now an unprecedented global coordinated move in how funds are moving into the ESG space. So an important role of what we aim to do is to facilitate that and to assist with that by providing a range of EV metals for clients to participate in. The current time frame for us would be towards the end of the year. That's something that we definitely want to get done before we wrap up the year.